Good morning. I'm going to talk to you today about the stock market crash of 1929. So, in the 1920s, America was doing really well. People had plenty of money. Most people had good jobs. They were happy and confident. World War I had ended in 1919, so everybody was still feeling pretty good about that. One of the things that people started to realize was that you could make a lot of money in the stock market. When we talk about the stock market, we're not talking about selling like cows or sheep or livestock or things like that. Stock, what we're talking about here, is little tiny pieces of the ownership of a company. So, like a company like Disney or Nintendo decides that they want to get even bigger. And so they have to a lot of times what they'll do is they'll split off part of the ownership of the company and sell it. They'll keep like 51% so that they always own most of the company because you remember 50% is half, but they'll split off the rest and they'll break it up into teeny tiny little pieces and they'll sell it. So if say they break it up into 100,000 pieces and sell each of those pieces for $1, now they have $100,000 and they can sell stock. Stock can sell for a lot more than $1 a share. So, depending on how much it sells for, you have lots and lots of money. So people started buying stock in the stock market, and you'd pay a little bit of money and then you'd wait and your stock would go up because the more people that want to buy it, the higher the price goes. And then maybe you sell it and you make a lot of money. So the problem started that people were using all of their savings to buy stock and then realizing, hey, I can go to the bank and I can borrow more money and I can buy more stock. And that's what they were doing. And then banks and businesses started investing in the stock market and using all of their money to buy stock. And so everybody was invested in the stock market. Even little old grandmothers and stuff were investing in the stock market. And what happened was that in September of 1929, the stock market went as high as it had ever gone. And everybody was feeling really confident and happy. But then in October of 1929, on October the 28th, which was a Monday, the stock market fell. It means the prices dropped from here to down here. And that's because at some point, and nobody seems to really know why even now, the stock market will get to a point where the stock market decides, prices are too high. It's time for them to fall a little bit. And it's called a self-correction. And what we know now is that if you don't sell your stock when it's dropped down to the low part and you wait a little while, it'll come back up. Almost always it comes back up. But this was the first time this had happened in this big way in 1929. It was the first time it had ever happened, and people freaked out. They panicked. And so they started selling their stock. And the more they sold their stock, the more the price dropped. And the more the price dropped, the more people ran to sell their stock. It was sort of like this bad chain reaction. And by the end of that day, by the end of that Monday, the stock had dropped about 12%. So the next day, on Tuesday, October the 29th, the market opened in a panic and people started selling and people sold all day long. And it just kept getting lower and lower and lower and lower. And so by the end of the second day, October the 29th, which was called Black Tuesday at the end of that day, because it had been so bad for the stock market had dropped another 13%. So all in all, in those 2 days, the stock market lost almost 1/4 of its value, and people lost their minds panicking. People started deciding that, I'm never going to have it. I'm going to be broke. I'm going to be broke. I've lost so much money, because when the stock market falls, that's the new price of what your stock is worth. So if you bought your stock, say, for $200 and it drops 1/4 of its value, your stock is worth way less. And, you may end up with your stock only being, if you buy it for, a lot of money, then it's only worth a little bit of money. And they didn't know that if you just wait a little while, it'll come back. And if they had waited a little while, this whole thing might not have happened, but we don't know. There's no way to know that. So people decided the next day, probably starting about Wednesday, I've got to get my money out of the bank because I'm going to be broke and I'm not going to have any money. I'm not going to be able to buy food. I'm not going to be able to support my family. I got to go to the bank. I got to get all my money out. You've seen movies where there's like bank robberies and stuff, and there's like this whole big room, the vault in the bank, and it's just full of bags of money. That's not the way that banks really work. The bank doesn't keep most of the money that's deposited in it in the bank. Most of the money that's deposited in the bank is loaned to other people. So they'll take your money and they'll lend it to somebody else. If somebody wants to buy a house or a taco truck, if you buy a taco truck, come by. I want a taco. It'd be great. But they lend that money to other people, and then the people that use the money to buy something, they have to pay the money back. But they also have to pay interest, which means like if you borrow $1 from the bank, you have to pay back $1 and another dime. That's the money that you pay, the price that you pay for renting the money, for lending, for borrowing the money. So the bank has loaned most of the money out because that's the way banks make money. And people started going to the bank to withdraw their money, to take their money out. And the bank, if you go and you tell them you want to take all your money out, they have to give it to you. So they were having to give all these people all the money. But what do you think happens when more and more and more and more people keep coming to the bank to take out their money? Right, sooner or later, the bank's going to run out of money. So now the bank can't give the money to the people that want it, so they close their doors. And they're like, okay, we're closed for today. You know, we don't have any more money. We're closed for today. So people are freaking out. They're panicking. It's like when a few weeks ago when everybody started hearing about the COVID-19 situation and everybody went out to buy toilet paper and now you can't get toilet paper anywhere. It's the same thing. They were trying to get all of their money. Then nobody could get any money because it was gone. And banks had borrowed money from other banks, and so they didn't have any money. And so they've got to get money so they can open their doors and keep doing business. So they would go to the people that they loaned the money to buy the houses or the taco trucks, and they'd say, okay, we need that money back. And the people are like, we don't have the money. And so they would take the house or they would take the taco truck, and then they try to sell that to somebody else so they can make some money, but nobody has any money because most people can't just go out and buy a house. They have to borrow money. And if you can't borrow money from the bank because they don't have any money to lend you, then you can't buy the taco truck or the house. And so there, the bank's not making any money. And it just went on and on and on and on and spiraled until it reached a point where nobody had any money. And, you know, there were things, there was property and there were things, and the bank would own all of these houses and taco trucks and stuff, but nobody could buy them because nobody could borrow money to be able to buy them. And they couldn't afford to pay their employees, so the businesses would close down. So now the people don't have any houses to live in, they don't have any jobs, and they don't have any money. It was a really terrible time. It's called the Great Depression. And that doesn't mean that people were really sad, although I'm sure they were. But it's talking about the Great Depression like the economy is depressed, it's pushed down. So this went on for about 10 years, more than 10 years. People were moving around the country trying to find jobs. It was a terrible, terrible time. Now, this can't really happen the same way that it happened then today. We have safeguards in place, so if the stock market starts to fall too fast, it shuts itself down and it waits about 15 or 20 minutes and then reopens. And usually by then, it's kind of settled down a little bit and it doesn't keep falling like it did. Also, there's the Federal Deposit Insurance Plan, which means that if your bank goes out of business, the federal government will pay you back the money that you had in the bank. So we don't have to worry about that anymore. So don't freak out too badly. We're going to be fine. All right. All of your teachers miss you. I hope you enjoyed this. Let me know what you thought. Thanks.